Hooty hoo, all my stock market gamblers. Welcome today. Friday made it to the end of the week. We're having a market rally today. Dow Jones up about 350, NASDAQ up about 300. We got the long weekend ahead. Now, what happens usually before a long weekend is an up day. Now, here's the reverse of that. What happens after a long weekend is usually a down day. So we're going to get another chance. If you're not in this market, you'll get another chance. I think we're going to come down and consolidate one more time, and that will be another buying opportunity if you missed this last short covering rally. That's all it really is. The shorts are covering. They're covering their positions, and we're getting this big, strong move upward. Okay, and I don't think that strong move is done by any means of the word. I do think we're going to get a pullback and a little consolidation next week, which will be the buying opportunity for the run up to the 50-day, maybe the 200-day on the S&P. Now, the SPY, we've broken above the 10-day. We've broken above the 20-day. When I think we'll get a rally up to the 50-day, but first I think we'll get a little consolidation, probably on Tuesday. Okay, now there's some other one I look at. I look at the HYG. The HYG, it's junk bonds. Now, when junk bonds, they usually lead the rally up, and they usually lead the decline down. With a direction that junk bonds go, usually the market goes. So I like to watch the HYG just to see for market direction. The HYG has been exploding higher, and that's why we're getting this rally higher. It's risk on, risk on. Okay, so I want to talk about real estate again because it's so fascinating. I mean, you can't make a lot of this stuff up. Real estate isn't a lot of trouble. I don't know if you know that. A lot of people don't think it's in trouble. Now, we got the commercial mortgage-backed security market. That thing's going to implode. Look at, you got half empty office buildings that have to be refinanced. They refinance them about every 5 years, and when they go to refinance these, there's not going to be anyone to give them loans. These are going to come onto the marketplace, and they're going to be dumping these at any price they can get, probably 80 to 90% off in the commercial market. Now, I mean, that's just crazy, right? Well, we got Amazon. They're dumping 10 million square feet of their warehouse space. So the warehouse market is collapsing as we speak. Now, this what I would call it a flash crash, right? I would. I mean, the numbers take a while to play out, and same with the housing market. A lot of people don't understand what just happened. I mean, we've just doubled interest rates. Back in August till now, interest rates have doubled. Basically, they've gone up. They were below 3%, and now they're up around 5.5%. They've basically doubled, right? And just since December, we went from 3 to 5.5%. Now, okay, that might be all fine and dandy if we stop here, but what if we keep going? What if the Fed actually does raise rates? Now, I think they're going to raise rates one more time, but then I don't think they can raise them anymore because everything's going to come crashing down. Now, they're the ones that made this hysteria in the housing market by keeping rates artificially low. Now, a lot of people would argue with that. Well, I would argue that they've kept interest rates at 0%, which has made the stock market explode higher, which have made wealthy people very wealthy, and these wealthy people have taken their money and they bought these second homes. Some have bought third homes, but they've already purchased these properties. Now, if the market comes back in, if the market crashes, what are they going to do with these properties? Well, they're going to see property taxes going up, homeowners insurance going up, and they got two of them, and they're just lost their wealth in the market if the stock market does in fact come down. Now, I know the market's going to come down. Now, I don't think it's so right now. I think we're going to rally back up towards new record highs, but that's just my opinion. Now, eventually, you're going to see the crash of all crashes, one that you've never seen in your lifetime. I mean, we're talking the stock market minimum probably easily 50%, okay? And when that comes down, what's going to happen to these houses that they own 2 and 3 of? Well, they're going to get rid of at least 1 or 2 of them, right? They're going to be sellers. They're going to be selling into a down market. Now, I will tell you that the market has already crashed, but maybe the sellers aren't aware of it yet. I have some clients, they're not aware that their houses have lost money. They think they can still get those $5 million prices, when in reality, they've already probably cut $1 million off of that. In many areas, houses have already started to go down. Okay, places like Dallas, places like Oh, wow. Chicago. Coming down year over year, Chicago has come down. You go to Pittsburgh, their prices are down 15-20%. Los Angeles, a lot of areas in Los Angeles have already dropped 5 or 10%. Now, where I live, San Jose, I live in the Bay Area. Now, San Jose is not the richest part of the area I live in. They're kind of on the poor side of town. Now, you get to the richer side, which is, Cupertino, Mountain View, Palo Alto. Those areas are still holding up strong. But okay, what's happening over in San Jose? Well, there's average price reductions of about $93,000. Price reductions, right? That's just a reduction. Okay, so obviously houses got overinflated. But when I go on the MLS and I look for places in San Jose, I can actually find homes that were just bought 2 years ago. They were bought 2 years ago, right around the start of the pandemic. And now home prices, they went up 20%, so they should be selling 40% above those prices. They're not. They're already come back to those prices. Maybe a little bit higher because they got to cover their get out costs, right? They got to pay me, the broker, right? The real estate broker gets paid. So they're covering some costs. They're trying to get out. But there's what I would call panic selling into this flash crash. Now in San Jose, like I say, these are not the best areas of town where I'm finding these homes, but they're already back to 2 years ago, the pre-pandemic prices. Just a little bit higher because they just bought it there and they were all excited that was up here, but they're trying to get out. They're trying to get out before the demand comes down more. And here's what's happening. Supply is coming on the market. It's coming on really quick. Now, I will predict a year from now, this takes time to play out, but I'll predict a year from now, we'll be sitting here talking about the glut of properties that have hit the market. The glut. People are just throwing their property onto the market. There is now a fear of getting out. There used to be a fear of missing out, and they wanted to get in really fast because it was going up, right? But now it's turned. We've had the crash, but the crash happened when we went from 3% to 5.5%. That is shocking. But inventory is going on the market at a record pace like we've never seen before, and it's coming on really fast. And these are the sellers. They're going, wait a minute, I want to get out at the high price that Billy Bob got out at. Too late. I'm telling you, it's already too late in many areas. Now, in some areas it's just fine. I'm sure your area is still going up because that's just where it happens in your area. But I'm telling you, in my area in San Jose, it's already turned. Now, there are certain areas where I do work. Saratoga, Cupertino, Palo Alto. Those prices are still strong because these are incredibly rich people that work at Apple Computer, that work at Facebook, that work at Google. They pay these high prices still. But in San Jose, it started, okay? It started. We have already come down 10, 20% in San Jose right now. And this is, my accountant calls it the creeping crud. Look, it starts in San Jose, but it's moving over to the west side. It's moving over to Cupertino. It's moving over to Saratoga, to Palo Alto, to Mountain View. These are the rich cities if you're not from the Bay Area. But it's moving over. It's a creeping crud. And that creeping crud is going to creep towards your neighborhood. You don't need to believe me, and I got nothing to gain by this. If you think I'm just fear-mongering, this probably is not the channel for you. I'm trying to warn you. I'm trying to warn you of what's coming. Look, we've got a glut of properties coming onto the market. Over 1 million that have started foreclosure right now. Over 1 million. I don't even know why they would be in foreclosure. Look at the prices have gone up so high. Why can't they just sell them? But there's 1 million properties that are in lieu of foreclosure right now. They're not making payments. Those are coming on. Builders are in big trouble, right? Over 1 million homes are being built with no buyers. They penciled out at 3%. They don't pencil out at 6%. These home builders, they're running out of money and they got to get these properties sold. They got to dump them onto the market and take whatever price the market will bear. I'm telling you, just be patient. Just sit back, get some popcorn, get a soda, watch the show, be patient. There's no hurry to buy right now. Yes, Yes, inventory is going up. Yes, the prices are coming down, but it's just getting started. It's fascinating. Look at it. It's going to change. It's changing rapidly, though. It's changing like a flash crash. I'm telling you, the crash has already happened, and the sellers are just catching on now. And the sellers are going, I got to get out. Why can't I got to get out? Because Billy Bob got out down the street. He was so smart. He sold 6 months ago. I'm a little bit late, but I'm going to get out now. I'm going to jump on the market. I'm going to throw my house out there. I got to get my house ready, though. I got to get it listed. I got to find a buyer before that demand just completely drops off. You see, we've been in this fake market, and this has been a fake market. It's a fake market because the artificial interest rates of the Federal Reserve, because the Federal Reserve was buying these mortgage-backed securities at the tune of, I don't know, $40 billion a month, and now they're talking about starting in next month in June. That's a few days away. They're talking about selling $40 billion a month, going from buying $40 billion to selling $40 billion. This is not going to be good for the market. Now, of course, in your area, that creeping crud's not going to hit you. Just if it comes your direction, look out for it because it's coming. But anyways, get out there. Have a great Memorial Day weekend, everybody. Hit the subscribe button so I can talk to you next week. Give me the thumbs up because it just helps my YouTube algorithms. Have a great weekend, everybody. We'll talk again next week. Bye-bye now.